Lauren, welcome. It's a big story. What companies may be seriously taking a look at buying Peloton?
Yeah, thanks for having me, Brian. Absolutely. It's the sharks are circling, right? Because they sniff blood in the water when it comes to Peloton. You look at Peloton's market cap and just how it's really collapsed over the past year, right? And I think that's the reason that we're really having this conversation today. So, of course, reports, like you said, really as of late Friday have trickled out into over the weekend that Amazon and Nike could be two potential suitors for the business. Now, I think in part this really isn't a huge surprise, right? Because an activist group came out about a week ago and issued a letter to Peloton's board actually calling for the company to consider a sale. And Blackwell's Capital, in this note to Peloton's board, named some of these companies, Nike, Google, Disney, Sony, again, as potential acquisition targets for Peloton. Again, you look at Peloton's market cap as of Friday, that was about $8 billion. About a year ago, we were talking $50 billion, right? So again, just to see how that's fallen over the course of the year. And as you mentioned, just here recently, we've seen more bad news really trickle out for the company. Again, they report earnings tomorrow. John Foley, the CEO, has not responded yet publicly to that activist letter. I think all ears are really going to be tuned into this conference call after those earnings numbers come out after the bell tomorrow to see how they address the situation.
Yeah. Well, let's see if there's any earnings in those earnings, Lauren, if you know what I mean, as opposed to just continued losses, right? What exactly would a buyer be getting? You know, it's an exercise bike company. I know they're going to be insulted probably that I called them that because they want to be data and lifestyle and fitness. You're getting a bike maker, you're getting a subscription service, and you're getting a treadmill. What's appealing about that? Right.
Yeah, well, you look at some of these names. So Google, right, which just actually completed its acquisition of Fitbit. You've seen their ambitions in health, just as one example. Apple, of course, has its own fitness product. So, you know, it's been deepening its ties in that space. Amazon, Nike, I mean, all of these companies, I think, are looking at the health and wellness industry as a growing industry coming out of COVID, one of the growing industries coming out of the pandemic. And you know, they want to have a stake in this space. And many of them already do, right? So in some instances, it could just be a way for them to further their strength here. At the same time, you know, I've seen a number of analyst notes come out over the weekend and even just this morning kind of arguing for why this wouldn't make sense, right? Now, Peloton has a huge manufacturing business. It's not just the subscription product that you're getting, and it's not just the existing customer base. So it's really this question of, would these companies want to take on such a massive manufacturing and production business, selling this, you know, equipment, right? That might not necessarily make sense for some of these players. I mean, Nike, for example, they were one of the companies that's being floated as a potential suitor that might be interested. Nike really hasn't gone into the hardware space. At one point, it had a fitness tracker. I think eventually it stopped selling that, right? It does connect to the Apple Watch, but so far we haven't really seen them make such a big bet on that space. So certainly a question to be raised.